going to Rogers Canada, well, we know that just last week it went through a turmoil when it went through an outage affecting millions of Canadians. And now this is just days before they're supposed to close the Shaw deal. And this is a time where Rogers CEO is essentially going on an apology tour, trying to get in front of the PR that it needs to do for the company's image and what it meant for the outage in terms of wanting to buy out Shaw, which would give it a bigger market share, and that could be a problem if it ever faces another outage in the future. So with less than 2 weeks to go until the biggest cable merger in Canadian history that will essentially tie up both companies, Rogers Communication Inc. and Shaw Communication Inc. Well, that's just 2 weeks to go, and now we have the CEO, Tony Staffarini, who is doing his PR. He's making sure that the deal looks good, that investors don't think it's shaky, as customers have been livid. And he's had some backlash from Ottawa when it comes to the outage that it experienced and when it comes to regulations. And this is all stuff that he has to get a hold of to make sure the deal goes through. Now, traders are increasingly skeptical of the $20 billion merger, which is a big deal. This is a $20 billion deal, which is supposed to close by the end of this month, July 31st, as a deadline. And there's speculation if it might even close at all. Now, when it comes to Shaw Communications, its shares closed last week at $34.70. And that is implying a 17% upside if the deal closes, where Rogers offers about $40.50 offer per price for shares. And so that is what Rogers is putting forward. And when it comes to investors, where they're saying that, Rogers' debt, which has been anticipated in what they've done in terms of to put this deal together, a 30-year bond issued by the company in March, which is to help finance this acquisition. It ended last week at a yield of 1.98 percentage points. And that's above the benchmark of government bonds, down from 2.4 percentage points in late May. And essentially what that means is that the price implies a 44% chance that the deal won't be completed this year. That is according to analysts, and yet it's to be seen that less than 2 weeks to go where it will stand with this big deal. Now, in the network issue that it experienced with the outage that was throughout the country, nationwide on July 8th, well, this was the worst, situation for the company to go through before this big deal. And it affected 10 million Canadians who lost their wireless and internet connections, making them go completely offline. And it affected from businesses that had payment systems that went down, forcing businesses to try to get cash on sale when, less people carry cash nowadays. It even postponed events, including The Weeknd, the singer who was supposed to do its world tour in Toronto at the Rogers Stadium, and that was delayed. So what does it mean? Well, the Shaw takeover was essentially in place to improve Rogers' wireless coverage across Western Canada. Rogers is a prominent player when it comes to places like Ontario and Central and Eastern Canada, but it's the Western Canada front that it's trying to expand in, and that's what it sees in terms of the takeover for Shaw. But what does that mean when you go out you have an outage throughout the country affecting 10 million customers, and now you want to acquire a company which would mean more customers on your infrastructure and your network? Well, that could potentially be a problem given what it's faced. And when it comes to the industry minister, François-Philippe Champagne, well, he had a meeting the next day after the outage that took place earlier this month. And what he said was that the network problem was unacceptable, and he ordered an investigation into the incident. And he essentially said he's giving the telecom giants 60 days to come up with a better system of helping each other out during network failures. He pointed out that, as you are, whether you're on your Rogers cell and you travel to the United States and you can still roam and use your Rogers mobile, well, that's because Rogers has done a deal with the carriers in the United States to be able to accommodate you and your wireless needs. And that's what the minister pointed out, saying that in Canada, you should have the same, where you should have backup with other network providers in case there's an outage, because tomorrow if Bell or Telus goes down, well, then that would be a serious problem if there is no backup coverage. Now, when it comes to the Rogers and Shaw deal, well, it's based on the Competition Bureau, which is Canada's antitrust body, and that's something that it needs to be able to get passed before it goes to the minister for the approval. Shaw is Canada's #4 mobile provider and is a player in major cities like Toronto, Calgary, and Vancouver. And what this means is it would give Rogers a bigger market share. So what did Rogers propose to do to make sure that it doesn't have to get rejected with the deal due to antitrust laws? Well, it said that it's going to sell off Shaw's wireless assets to Quebecor Inc., which is a Montreal-based cable and wireless firm, and that it's not necessarily clear if that is enough to settle the competition when it comes to the antitrust laws, and whether if it would go to the competition tribunal based on, which is essentially the merger court. Now, as this story unfolds in the next 2 weeks, you can make sure that Why Business will bring you the latest headlines.